You've probably heard that the S-Corp tax election could save you a bunch of money come tax time, but boy are S-Corps complicated and confusing. I believe the key to properly implementing an S-Corp or properly maintaining your S-Corp if you already have one is understanding the one fairly simple way that S-Corps save you money, and that is what we're going to talk about in this week's video. Hey team, I'm Dave. I'm a financial planner and the founder of Turning Point Financial Life Planning, where I use the tools of financial planning to help therapists grow their impact and build lives that they love. If you're new here, please be sure and click on that subscribe button. So maybe you're considering the S-Corp tax election, or maybe you've already made the election. Either way, it's really important for you to understand how the election is actually working. Too often, I've seen people jump into the S-Corp election without understanding the gravity of some of the decisions that they're making, and I do not want that to happen to you. I want you to understand how your S-Corp is actually working so you can make thoughtful decisions and ones that don't later get you in hot water with the IRS. So let's jump right into it. The key to the S-Corp tax savings comes from the fact that different types of income get hit with different taxes. So let's walk through the three different kinds of taxable earnings that you might receive. First, we have general income. The IRS, and in many cases, your state government, generally will tax you on all income from any source. So anything you earn from your practice is going to be subject to both federal and, in many cases, state income tax. Second, we have earned income. Now, earned income is still income, but it's what you receive in exchange for working a job. So as you'll see, this is a circle within the circle. So earned income tax gets hit with regular income tax and also gets hit with FICA tax. FICA tax is also known as self-employment tax and can be up to a whopping 15.3% of your earnings. So it is a painful one to bear. Finally, we have payroll income. That's money you would receive from the formal running of a payroll and receiving a paycheck. Now, that is the most dire situation from a tax perspective anyway. It gets hit with all three different types of taxes. As you can see, it is within the earned income circle, so it is a type of earned income. That means it is also a type of income. So that's right, all three types of taxes: income tax, FICA tax, and the payroll taxes. That is a little bit of an ouch. If this stuff is sounding a little confusing, go back and watch my video on understanding taxes in your private practice. There's a link in the description box below. So let's talk about how you're going to be taxed as a default. So if you're operating as a sole proprietor, that means you haven't formed any formal business entity. What kind of earnings are you receiving, and therefore what kind of taxes are you paying? And in that case, they're all going to be in that middle circle, the earned income category. So you'll be getting hit or assessed with income tax and FICA tax. Again, FICA is also known as self-employment tax, but at least you will not be getting hit with those payroll taxes. So also, if you are operating your practice through an LLC or a professional LLC and you haven't made the S-Corp tax election, that means you're still just being taxed like a sole prop. It's really a myth that simply forming an LLC without taking any more formal actions will save you any more money on taxes. The truth is it won't. You will still have all of your earnings coming to you in the form of earned income. So income tax and FICA tax is what you'll be paying on 100% of your earnings. So now let's talk about how the S-Corp election will change how you're taxed. And if you make the S-Corp election, the nature of your earnings changes. And it is this change that creates the potential for tax savings from the S-Corp election. And that change is that your earnings get split into two different parts. The splitting of your earnings into two parts, this is the only way that the S-Corp saves you on taxes. This is the entire secret to S-Corps, because remember, different types of earnings get hit with different types of taxes. So let's look at the two different buckets an S-Corp will split your earnings into. First, we have your salary that you earn through payroll. So this is going to be a change from when you were operating as a simple sole prop or a simple LLC. You're going to be running payroll for yourself and getting paid through a paycheck. So that's one part. The second part is the profit distribution. So that's all the profit from your business that's left over after all expenses are paid. That profit distribution comes to you in a separate stream or a separate part or a separate flow of earnings, if you will. And here's how the tax savings play out. So when we look at payroll, this part, again, ouch, all three different types of taxes: income tax, FICA tax, and now payroll taxes. So payroll taxes is actually a new tax that you weren't even paying at all previously when you were just a sole prop or a simple LLC. But the reason that this is a good trade-off is because that other part of your earnings that comes as a profit distribution, now only income tax is assessed on that distribution. So no more FICA tax. And it is removing FICA tax from a big chunk of your earnings from that profit distribution piece. That's where all of the tax savings from the S-Corp come from. It is simply just avoiding FICA tax, which is again 15.3% or up to 15.3% on the profit distribution piece. That is the entire tax savings from an S-Corp. As you've probably figured out or are beginning to figure out, the more of your earnings that you can push into that profit distribution piece of your earnings, the more you'll save on taxes. Because your salary gets hit with all the taxes, profit distribution only gets hit with income taxes. So how do you make the profit distribution as big as possible? By setting salary as low as possible. But guess what? The IRS is wise to this strategy. They don't want you to set your salary very low or arbitrarily, so they have what is known as the reasonable compensation standard. And that means that your salary needs to be set at a level that is, well, reasonable. What's reasonable? Well, it's subjective. But you want to document your thought process around how you set your salary by looking out in what's going on in the world around you. Look at the market in your geography and see how much therapists are generally earning. You can look at the U.S. Bureau of Labor Statistics for some good solid data on this, and I'll include a link to their database in the description box below. And then also consider how much would you pay an employee in your practice? And maybe you already have employees, in which case that's a really valuable data point. You don't want to probably deviate too far from what you're paying your own employees when you pay yourself for the role of employee in your business. This setting of reasonable compensation is a thorny issue. I've put some additional articles that you can read through about this setting of this in the description box below, and it is a really good time to consider working with a professional. A CPA is really going to be your best friend here, and I would encourage you to find one who really knows what they're doing when it comes to S-Corps. This is something that they focus on because even tax professionals don't know everything about everything. And I have seen some questionable choices made by CPAs out there, probably simply because this isn't their area of expertise. But working with a professional can be a great move here. And the other reason for that is if you can convince yourself that you can set your salary at a level that will generate a lot in FICA tax savings, that's a great first step, and it is only the first step. There is a lot more complexity and additional expenses and administrative burden that you will have to bear to keep your S-Corp in good standing. And you do want to do that, otherwise the IRS can come in and retroactively revoke your S-Corp status, and that means you have to end up paying a lot more in taxes. Again, something you absolutely do not want to have happen to you. So that is really it for this week's video. Again, be sure and subscribe because next week or in the next video when it comes out, I will be talking about all the other things you need to think about when initiating your S-Corp, when first making that election, or when you're keeping it in good standing. And as always, if you have any questions about what I've covered, please reach out and contact me. I'd be happy to chat with you over email. And you can even navigate to my website and check out what is now new at the moment I'm recording this video anyway, which is my Quickstart coaching intensive, which is a 90-minute coaching session where we will just scope out everything that's going on in your personal financial life and even in the finances of your private practice. We can talk about this S-Corp election or anything else that's on your mind. Be sure scroll to the description box below and click through my website to see what that would be all about and if it is the right fit for you. At any rate, thanks so much for stopping by and watching this video today. I hope you have a great rest of your day.